So what happened on Monday? Everybody seems to be shocked, surprised, and causing a big hoo-ha around social media, crashing YouTube videos or trying to explain what happened using fundamentals and stuff like that, right? So for this video, I'm going to show you how you can actually anticipate that using the concepts that I have been showing for the past few months or the past few weeks. So let's start with Nikkei. This is a chart of Nikkei, weekly chart, okay? For other stocks or assets that you're not actively trading, you want to look at them from the weekly time frame because that would offer you a better price action due to the fact that there are a lot of opening gaps, right? So the weekly time frame is the clearest in my personal opinion. If you're not trading on an intraday and if you're not swing trading, you're basically like a long-term investor, you look at the weekly chart, right? So for Nikkei, what can you see from here? This is really obvious, right? If you have been following me, this is too obvious. It's gonna be a no-brainer to you, right? We take out this swing high using this order block, right? This consecutive up close candles is one huge order block. We closed below the low of the order block on the 3rd week of July, right? Look at it, candles close. Use the fibs, highlight the order block. The following week, we traded up all the way into the 25%. You see what it did there? This is what I've been telling you. This is what I've been showing you for the past couple of weeks, okay, on the lower time frames. So you have to understand that time is fractal. Anything that happens on the lower time frames will happen on the higher time frames, vice versa. Right, so we traded up all the way into 25% and we dropped, closing below the breaker and closing within this down close candle. This down close candle was utilized before, right? As you can see right here, let's draw out the fibs. It was used right here to send the price higher, taking out this swing high. So this is a significant bullish order block. And for last week, we closed below 50% and below 75% of this bullish order block. So this basically tells you that we are exceedingly bearish and we are going to run lower below this bullish order block. This bullish order block is not going to be respected like before. So what can you anticipate next? You look for PD arrays below the bullish order block. And what do we have? We have these huge inefficiencies, we have this swing lows, and we have the last down close candle. This is your last bullish order block before this move higher. Am I right? And if you take a look, we have utilized this order block before right here. And then it traded up all the way, right? So this order block was a support and was the origin for this move higher. Price came down all the way into the 50% of this order block and rejected higher. So why did it reject higher? Because you got to have some form of rebalancing on the buy side. You can't just keep going down forever, okay? You got to rebalance to allow smart money to sell short. This right here, retails will see it as support, right? Over here, this is your, what they call this is a, I think it's a supply or demand or something like that, but it's like a support level, right? They're gonna buy here and their stops is gonna be here. And looking at how it reacted off this level here, they are building more orders below here, right? People are going to long, people are going to buy, and where would their stop losses be? The stop losses will be here. Okay, so what invalidates this setup lower? If we trade above the breaker, this right here is your breaker. High, low, higher high, closing below the low that made the high. This is your down close candle, and this is your breaker. What I can see is that we might want to trade back up into the breaker before the second distribution. Can you see this is a market maker sell model here? So this is your initial distribution. You're going to have a second distribution, second leg of distribution, which trades up into this level here and then drops with speed, taking out this original consolidation that formed these two highs here. Okay, so this is what you're going to expect moving forward for Nikkei. Okay, invalidation will be price closing above the order block. If price ever trades back up above this order blocks, I mean not order block, but this breaker's high, that is a soft invalidation, which means it's not as it is not as bearish as I thought it would be. But as long as price stay below 50% of this breaker, we are good for lower prices. This is your classic breaker model from ICT. Right, and for the Japan Fed interest rates announcement and stuff like that, you can take a look at USD JPY. It's the same. Okay, so over here we take out this swing high with this consecutive up close candles. We closed below the up close candle right here, taking out a swing low, closing below the swing low, and this is a down close candle with a near term swing high. So is this a breaker? It will be a breaker on the lower time frames. Okay, so I'm not going to go down into the lower time frames like hourly, but you can see from the daily. Okay, high, low, higher high, lower low, closing below the low that made the high. Can you see? So you may ask, where is the last stop hunt? You might see it over here. But remember that ICT mentions anytime price trades into a rejection block, it is a validation of a stop hunt. So right here, this is your rejection block, and then you trade it higher. So this right here is your stop hunt. And these two down close candles would be your breaker. And if you look to the right, you have your fair value gap, you have your order block, you have your swing high, and price trades up into the breaker and drops. Right here. Is this a surprise? No, it's not. So on a weekly time frame, if you don't want to use the daily time frame as your entry or your stop loss, you just want to stay on a weekly time frame, possible. You have to understand that right here you have a near-term swing high, and this is a possible breaker on the lower time frames. Okay, you're going to use 50% of the week, and same thing as how I use the last order block, you are going to enter off the 25%, which is right here. As soon as we close below this swing low and you anticipate that there is a lower time frame breaker, you take a short entry here and your stops is above this down close candle. and then you look for discount PDRAs. So where is the discount? From this low to this high, where's the discount? Right here, 50%. And the nearest 50% discount PDRA is this swing low. So that's where your target is. Initial target, okay? So right here we have closed the week below, way below, taking out all the stops, trading all the way into the last down close candle that started this move higher. 25% rejected. Did it trade into the rejection block? No. So this is not a stop hunt yet. Okay. So what am I going to anticipate for the next few weeks to come? We are probably going to take out the stops below here, and you're going to aim for the rejection block. Where would be your entry? As of right now, the most logical and the best risk to reward entry would be here. This is your inversion fair value gap. Your aggressive entry would be right here. This small little fair value gap that was utilized before, right here, as you can see. The market opened, traded higher and dropped. Right? If you don't believe, let's take a look at the daily time frame. The hourly time frame. Okay, this is Sunday. This is the opening price. We opened, we trade higher a little bit, and then we dropped. All right. So if you want to be really aggressive, which is not what I recommend, you can take this as your short, aiming for this rejection block. But as you can see, the risks to reward is way too high. What I would recommend is you wait for price to trade into this level here, and then you look for a lower time frame stop hunt. Because you're on the weekly chart, you're going to use the 4 hours or the daily time frame as your setup, which means you're going to wait for a daily stop hunt or a 4-hour stop hunt for a setup into the lows down here. Right, so it's not surprising at all that you see this Monday move here. Everybody is freaking out, but you can see it way ahead of time, way ahead of everybody else. If you just look at the open, high, low, and close for the candlesticks. Right, so with this, I'm going to end the session here. And hopefully you can gain some insights from this, and hopefully it might kickstart your journey to learning ICT. I think his concepts are very useful, and I believe that his concepts are the absolute truth to the market, because I've been using them for quite a while and I've seen them repeating countless of times over the past 2 years. I've been on the charts almost every single day, and I can guarantee you that almost every week you will get one setup minimum. Almost every week. Okay, so with this, I'm gonna end the session here. If you like, if you gain any insights or if you find this helpful, do leave a like, and if you have any questions, do leave them in the comments section down below, and I'll talk to you again. Stay safe, because the markets, it's going to be very volatile moving forward, because we have US elections and things are starting to kick up. Right, and with this, I'll end the session here. Good luck trading this week.